Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is with Carson and Jennifer Zimmerman with AHF Products. How you guys doing?
Hey, morning, Kemp.
Good morning.
I'm good. Well, you got big news. Everybody knows AHF Products has bought a big part of what was Armstrong Flooring's resilient business. We'll get into some details on that. First, both of you, both Jennifer and Brian, have worked at Armstrong before earlier in their careers, so you know the company really well. Brian, you and I have done, I think, 4 or 5 major podcasts on Floor Daily about acquisitions. The first big one was Mohawk's acquisition of IVC. And then Armstrong Wood, when AHF brought Armstrong Wood, we did it. And then we did LM, and then you bought Parterre, and then you bought American OEM, and now you've bought many of the parts of Armstrong's vinyl business. So you've been busy in the acquisition mode, haven't you?
Well, we never keep it dull, Kemp, and we try to keep you on your toes there.
Okay.
And we've been busy.
You've got a lot of experience in trying to decide what types of businesses you can bolt on and continue to grow what you're doing. If you don't mind, I want to just set a stage just a little bit. We did our May issue, our annual report issue, and obviously AHF Product, 3 years old, owned by Paceline, private equity firm, and you're the largest in the hardwood business because you acquired Armstrong's wood business and then bolted things on like LM, as we mentioned earlier. And we had you in that May issue. Of course, this is our estimate, but we had you in that May issue at around $418 million in sales in hardwood. That's our estimate. You know, last year, just looking at what Armstrong did in the vinyl business, over $400 million in sales. Obviously, you didn't buy the whole thing, but you're on a fast track to build quite a company. And I guess the company will continue to be called AHF Products, right?
It absolutely will, Kemp. You know, last year, in addition, we had gotten into other products. You know, we bought Parterre and got into commercial, and then we got into vinyl. So last year was a year that we really spread our wings in terms of brands, leveraging the acquisitions we made and getting into other product categories. So, you know, outside of the Armstrong thing, we basically doubled our business from where we were 3 years ago when we set out on this journey. And we're just getting started.
Well, let's cover a couple things. First, while we're talking about brands, I know you've got a lot of the old Armstrong hardwood brands, but this question of the Armstrong brand, is that part of the acquisition or does that go away?
Yes, the Armstrong brand is part of the acquisition. Today we have 13 brands, actually. Yeah. When we started the business, we had 3. And Armstrong will make it a 14th brand. It's obviously a very important brand to the industry. There's a lot of folks that make their livelihood off products under those brands. But Kemp, not only the Armstrong brand, the sub-brands, which are, you know, in this industry, you know, I've been doing this a long time. There are brands, Imperial Exelon, Medentech, Diamond 10, just one pattern in Imperial Tile, 1899. These things are as synonymous with flooring as Kleenex is to tissues. These brands are vitally important, and we're going to leverage them in our business. You know, that's good for us. It's good for the folks that are coming along in the plants, and it's awfully important to our distributors and flooring contractors and retailers as well.
You know, I've been following this whole bankruptcy thing. This morning, there were 549 dockets that were signed by the judge. Can you imagine the paperwork involved? And the Lancaster newspaper ran a story this morning that says that you were the only strategic buyer, which means that the fact that you prevailed, much of the business continues to operate. That's good news, at least for these 3 factories, the Lancaster factory, the Beach Creek factory, and the Kankakee, Illinois factory. And I mentioned that one, by the way. You, in your earlier career, used to run that factory, right?
I did. Very earlier in my career, I was plant manager of one of the Lancaster plants over there and then went to Kankakee. When it celebrated its 50th anniversary, this year it's actually celebrating its 75th anniversary. And I hopped on a plane Sunday night, was there Monday morning, and we're having crew meetings with the folks. Some of them are new. Some of them, I remember, they were a little grayer. I was a little heavier. So then we remembered each other. And then I went to Beach Creek on Tuesday and the Lancaster plant on Tuesday. And, you know, I started my career in the Lancaster plant. You know, that plant allowed me to raise my family. And, you know, this is an important investment. I think we can make it profitable and grow it. It's important to us It's important to the folks in the plants, but we know that this is also an important brand to our customers, whether you're distributors, retailers, or flooring contractors. A lot of their livelihoods are based on us having success. So we've had a lot of folks rooting for us.
Yeah. The employees, the response has been overwhelmingly positive, and the customers, we're just hearing great feedback that they're really excited that the brands and the products are going to continue for their own businesses.
The plants and the brands are open for business.
Yep.
Be 2 weeks basically before we close on it. We expect to close on it next Friday, and then we move and grow from there.
Yep. We have a lot of heavy lifting to do between now and next Friday.
Yeah, and that's a good point, Jennifer. Just by nature of this transaction, we are going to have to be flipping over the information systems, the order systems really quickly over the next 2 weeks. We've been working with the Armstrong distributors over the last couple of days on how do we execute that transition as swiftly as we can. And those distributors, without exception, are going to make this happen because it's important to them, to the flooring contractors, to the retailers. As we move this over, which we have to do, we're going to move it over onto the AHF systems, and we have to do that swiftly. I would just ask for your patience as we do that, but we'll get there. We did that with the wood business when we carved it over, so we know we can get there, but we would appreciate everybody's patience and support as we flip these systems over, which we absolutely must do over the next couple of weeks.
I think it's interesting you mentioned this profitability, but everyone knows that Armstrong had 4 years of losses. And, this is not a merger. This is you taking, the assets that you think you can make money with and continue to, offer the market some great products. I think it's important to point that out. On the channel question, you'll continue to sell both direct and through distribution, right?
Absolutely, Kemp. We're going to sell under the Armstrong brand. On commercial, we already have 2 other brands. We have AHF Contract, we have Parterre, and we're introducing Autograph. So we've got other brands as well. And these plants are first-class asset. You think about Kankakee, you think about VCT, that's as essential as bread and butter. And you say, boy, it's not as interesting as a steak, but it's as essential as bread and butter. It's everywhere. But we need to put more load on these plants. The plants need more volume, and we've got a lot of partners that we need to increase the reach of those plants, but do it in a way that we segment the channels and everybody's able to make money and we're able to make money. I think this is going to be better for the plants. We can get them to profitability. I think it's going to be better for our channel partners as well, quite frankly.
Yeah. Another question about product. You have a Stratamax product that's made in that Stillwater, Oklahoma factory, and that's a very popular product. Stillwater's not on the list. It's going to be shut down. So what happens to Stratamax?
The brand survives. We will make a different version of Stratamax with many of the performance features and benefits out of the Lancaster facility. Also, at Stillwater, while we didn't take Stillwater plant, we did take the cutting machinery. We plan on relocating that machinery to Lancaster to be able to make vinyl planks as well. So there'll be a Stratamax. That's a wonderful brand, wonderful performance. We'll have a version of that rolling out in the not too distant future.
Yeah, our teams are already working on the new replacement for Stratamax.
One more question, not to get in the weeds on this, but you were making some beautiful non-PVC commercial products in China. Will you be able to continue in that category as well?
Kemp, the products that we're getting imported from Asia, we're not continuing with. We have our own heterogeneous products today. We have a wonderful line of commercial heterogeneous sheet, commercial homogeneous sheet, and commercial inlay. Just a wonderful line, a world-class line. I think there'll be the opportunity to extend some of that product that we actually already have here in the United States into some of those collection names. We wanted to take the parts of the business that we thought we could be successful with moving forward and leave behind the things that we had different options or better options to get the business growing and healthy. And that's what we're doing.
All right. Well, listen, it's Thursday, and I know you guys have a busy 2 weeks to go. I appreciate you spending time with us and telling us the fact that Armstrong's resilient business will continue to be a ongoing concern under your direction.
We are open for business, guys. Keep the orders coming.
All right, again, been talking to Brian Carson and Jennifer Zimmerman with AHF Products, and you've been listening to Kemp Harr and FloorDaily.net.